Hey folks, Bill Bodner here. Thanks for tuning in to our MMG weekly recap. Up on the screen on a Friday, we can see mortgage-backed securities losing a little ground. 10-year note is ticking higher. Stocks have been in complete rally mode after Monday's washout, the one-day sell-off, safe haven trade in response to a Delta variant fears. So where are we now on a Friday? Well, a couple things, and then we'll talk a little bit about what's going on next week. First off, there's a disconnect between what's going on in the Treasury market and the mortgage-backed security market. I hope you're watching it and share, and being able to share with your clients what's really happening in our world, because this is happening. This purple line is the 200-day moving average in mortgage-backed securities. It is stopping the advance. So while the 10-year note was rallying and partying on Monday, getting down to 112 on Tuesday, mortgage-backed securities were reversing and moving lower, and we're now beneath, have been and remain beneath this purple line. Rates can't get better. Mortgage rates can't get better unless we get above this line. Could happen. No one knows for sure what tomorrow brings, but it's probably going to take something bad. Maybe Delta variant becoming more of an issue, more of an economic slowdown, more restrictions. That could certainly do it. But this is what we're watching. At the same time, a 10-year note yield, it's at 130 now. Its 200-day moving average is at 126. This is the stuff that we watch at Mortgage Market Guide, and this is the stuff you need to be sharing with clients, because these are the barriers that are. This is why rates are turning around. There's technical reasons why rates turn around. And so heading into next weekend, the technicals will take a back seat and we'll watch bonds respond to these levels. But they have a lot of news now to feed off of. A ton of economic reports, including the Fed's favorite gauge of inflation, which is the Personal Consumption Expenditure Index. Remember, mortgage rates are now running lower than inflation on a year-over-year basis. That's completely unsustainable. We also have a lot of auctions coming next week. $180 billion worth of treasuries going to be sold in the market. That can have a big effect. We have the Fed coming on Wednesday. So it's an enormous week. So while we go into the weekend, let's think about where we are technically. Let's talk about all the news that we have coming up next week, which could really bring some volatility. And then, of course, in the background, we can't ignore what happened on Monday, this Delta variant and the threats to economic growth. It could certainly slow things down, because that could have an effect on rates in the near term as well. So I hope this finds you well. Have yourself a great weekend. Be safe, and we'll talk to you soon. Bye for now.